things. Write it down. 3 things. First thing, position management. First thing, re-entry. I didn't like what they did. You know why most people re-enter the market? They bought, and it goes against them. And they buy again. Why do they do this?
To recover the losses.
Because the thing is going up.
To be right! It cannot be that my analysis is wrong. It must turn around. Cannot be. I'm right. I buy again. I'm serious. What's the second reason? You were close, but not quite right. What's the second reason after being right? It's very important for humans to be right. Do you know this? Yeah, definitely. What is the second reason?
Greed.
They don't want to fail. Ego.
That's the same as to be right. Second reason, you were very close to Helga?
Yeah.
Yes. The second reason is to make an average of both trades. If on this trade I'm losing a little bit and I go a little bit further down, I was gonna go double here, you remember the green line? But I go a bit further down and I'm gonna close a bit earlier, right? And I'm gonna pro-mediate both trades. That's the second reason for our pre-entry, which is more important than to be right. So if you re-enter the market, don't do it out of ego. Do it out because you have a reason in your trading system, which is defined beforehand. Don't ever do this. As a matter of fact, we're going to teach you one thing. If you cannot trade and make money without re-entries, you're not a good trader. We trade only. Did you happen to read an excellent comic, Asterix and Obelix? Somebody read this in childhood? I think I have all of them. I even bought the new one that came out. You know, they're amazing. And you remember there were 2 guys there, right? Asterix and Obelix. And if you didn't read it, don't worry. You can get educated later about this. Okay, it's very important education because there's a different generation. I mean, really. I mean, the guys in my age that read this in their childhood are very different to the guys. I don't know what they watch now. It's terrible. They don't even have human faces. I mean it. It's like, oh, they speak only bad words and cursing and stuff, right? The new cartoons. So Asterix and Obelix were very distinct from each other. Obelix, what did Obelix do actually when he found the Romans? How many Romans he was fighting against per time? 20, 30. What? Lots, hundreds. That's how many traders trade. They trade Obelix systems. You know, against everybody. How many people in the room? 80 people now? I'm gonna just me alone, I'm Obelix. You know, because he has superpowers. He had superpowers because you can tell it better. You know, he fell as a child in the exactly the cold room. You know, there was a druid. He prepared this incredible thing that gives superpowers, and he fell as a child inside, right? So if you're not Obelix, right, you should trade like Asterix. What happens with Asterix? There is one sentence in the comic that I understood, but only as an adult, which was the Romans one by one after another. He said, okay, Roman number 1, boom, boom, we fight. I win. Okay, next Roman. Boom. The Romans one after another. That's how you should trade. A trading system should be an Asterix system, or what we call officially an atomic system. Meaning, one trade, lose or win, no more trades. One trade equals one position. One trade equals one position. It's the same. And if you manage to make money like this, you will make money later with re-entries. But if you don't manage to make money, and you need to re-enter only to make money, something is wrong with your trading style. You follow? So you need to learn to make Asterix trading systems. You follow? One trade per time. Per system. You follow? You're not playing Obelix anymore. that kills a lot of systems. No martingales, no grid, no hedge. It's dead. We don't allow this. We only allow asterisk systems. It's forbidden in my education. Actually, we don't trade this. We trade this, but only for a small percentage of our capital, which is risk capital. You can do this. You can have asterisks for 80% of your capital, Anubelix to do the crazy stuff on 20% of your capital, right? You do the conservative thing, 80-20 rule, right? And you do the risky thing, but we're not going to explain it because most of you are kind of gamblers, and we need to switch you to become mathematical traders. You follow? So no more Obelix in this room. You hear that? You understood? No more re-entries. Is that clear or not? Second thing you can do with position management, partial exit. This is allowed. You can exit a trade, percentage of it, right? You say, okay, I went in, okay, I go out with half, I go out with 1/3. That's allowed. That's not forbidden. Okay? And the third thing you should do, or you can do, is move your stop loss, and that's a trailing stop, which is a smart stop loss that just secures your earnings. And one of the best trailing stops ever you will meet around in the market, you'll get it for free from us in the second bot that we give you. And if you come on Tuesday to the course, I'm going to explain you not all the rules, but a lot of them, how this trailing stop is working, because this trailing stop is working on volatility. And it will secure, it did for us last week, a 5% on one trade. Last week, no, 2 weeks ago. Okay, I will show it to you. I will show it to you today already, how this trailing stop is moving. Because it's securing your earnings very smartly. One of the problems that traders do it wrong, there is a unique case of this, a unique case which is called a break-even routine, which manual traders do, and which automated traders don't do so much, is when they have a bit of earnings, they put their stop loss to 0. And I tell myself as a mathematician or whatever I am, I don't know what I am, actually. So I tell myself, why at 0? Why not at 5 pips or minus 4 pips or plus 13 or plus 2 pips? You understand? Why do I need to put the stop loss at 0? It depends on what the market tells me, right? It depends on the pair. Sometimes break-even is at 2 points, at 3 points. Break-even is not always at 0. So there's a unique case, which is to move the stop loss. Let's say we have this buy trade. We have the stop loss here, and we move it once around the entry point. That's called a break-even routine. That's a sub-case of a trailing stop. Trailing stop is the general thing. Break-even is moving only once. You understand? But it's the same thing. Some guys need a coffee here. Some faces. No, I'm not naming anybody. When we get closer, I'm going to start not selling names. There's a very beautiful cafeteria here. The cappuccino is not that great, but the hotel is nice. Okay. You follow? Break even is just one particular case of trailing stop. You understood? And we don't do it very much as automated traders. Manual traders love it. They say, okay, I made some earnings, I go to sleep. I put it at 0. They come back, 0. What's the point? Well, I didn't lose at least. They put it again. They go sleep, boom, 0. Come on, put 5. 1 pip. You understand? These three things together make position management. Follow? Okay, I think it's time for a break. It's 9:30, right? We're gonna keep the breaks. This one we can keep a little bit short, okay? And there is Peter, Paolo, Ross here. If you want to have a conversation also with us, we don't have much time. Really, it's the moment to have a conversation. If you are interested in the Tuesday thing, or you want to know more about us, just ask Olga, and I'm going to meet you down there, and we have a small conversation. Or ask for Ross. Peter is here. Paul is here, right? Whatever you need, use this time, 10 minutes, 15 minutes, okay, break. There's water there, and there's toilets outside. Okay, so if you want to meet me, ask Olga. Oh yes, please. We need after the break, she's gonna collect these questionnaires. Guys, you do this after the break. No, they will do it after, you will collect after. Please fill this out. After the break, yes, take your time. Peter is there, Paul is here, so you know them.
How long is the break, sir?
10 minutes. 10 minutes.
10 minutes. Yes. When you open the account, actually, you should fill out the application today if you want to come to the advanced course. That's very, very important. I don't live in London. You understand? I don't know when I do the next one, actually. You know? So if you want to be there, you need to become a kind of Axie trader. Okay? Which means there is an application form, you need some documents, you need a power bill or something which is not too old, right? Your ID, and everything must be done before Tuesday. You need to fund the account before Tuesday. Because we don't want people that already funded and trading and people that want to fund, they don't count. You understand? You need to do everything on Monday. Okay? And there's 3 offers here. And I would suggest this one, and we'll talk about historicals because it's very complicated. The sometimes get corrupted. But whomever had problems with this, we'll help them. On Tuesday, I'm going to be full-time and Olga just taking care of your historicals. So you can do your back tests, okay? So you'll get 2 robots, which I'm going to show you today in the pen drive. This is all for free. You understand? If you open a $2,000 account, you got it already in the email. You're going to get 2 manual systems that I'm going to explain in videos. So you get 4 trading systems, not 2, 4 in total. And if you fund 10 grand, you get all the historical data, okay, with 14 years many pairs, right? And if they are corrupted, something happened on Tuesday, we will take care that they are perfect on your computer. So you can test 31 pairs. It's a lot of things. Some gentlemen asked me, can you do indices? Of course. Sorry I don't mention that. I just presuppose that everybody knows, but in MetaTrader you can trade the DAX, you can trade the FTSE, you can trade a lot of indices. And on automated trading, especially the DAX is the best index for this. You can do some things on the Dow, but the best index for trading with automated systems is the DAX, the German index. And you can trade it. I will tell you where you find the historicals, and if not, remind me on the private course, where you find good historicals for the DAX, because MetaTrader will not have them. And I will tell you where you have 7 years of DAX historicals. So it's worth. Just fund a $2,000 account, but you need to trade, okay? Not just funding on that. And then you come here to the front before the end of the course. Once you get the bot, you need to sign a legal disclaimer that you're responsible, because we will give you the Ferrari. But if you don't get your license, right, and you want to drive 200 per hour on the small road, that's your problem. If you want to trade 20 lots each time, that's your problem. It's not my problem anymore. So you sign us a legal disclaimer, right? You prepare all the application, and on Monday, you talk with Pete, with Paolo, with Ross, and you get your things done. If you come on Tuesday and you haven't fun, I'm sorry, I don't want to be unpolite, you cannot get into this room. It's a small, cozy room with 15 chairs, and I got told today we have already more, like 9 people already, so we have 6 more people, and I got told today there's no way we can get more people in because of fire regulations, right? It's in the center of the city in Cannon Street. So you should think about this over the day if you want to be part, and just do it. Get your 2 bots, okay, and you get them already. And on Tuesday we meet one more time. If you're working on Tuesday, don't worry, just come in the evening. Okay, we'll adapt to you. Okay? So you know this. Okay, and you'll get something like this later on. I'm going to explain the rest of the papers later, and you should really think about it and talk with Ross and Paolo and Pete and use the offer, you know? So that's the thing. And if you want private assistance, then you need to open a really big account. Okay, I just want to say, this says very clearly in the slide, if you want really that we handhold you, then you need to open a bigger account. Okay, otherwise we can give you service on these 3 courses. It's another story, of course, if you do our advanced education. And we have here one student which already did it, and I think he's happy about it. And that's another story. I will explain it later. Okay, but you should really get used of use this offer, which is quite unique because normally offers are tied with some payment or whatever. This is not. This is your trading account. It's like a bank account. It's FCA regulated. And in a little while, after the next break, Ross will explain about the broker. It's really a very big company with more than 35,000 clients. And what is most important for me is the execution. Because I work with bots, and I want things real fast, real well. And some brokers show you incredible prices, but when you go into the market, you don't get what you see. You know, and I'm very happy with Axie because of this. You know, so you should really consider it. And they're in London anyway, and they can attend you. So we talked about 4 legs. We'll continue now, and with the 2 most important legs of a trading system. And about money management, I'm going to skip it now. I'm going to just say only one thing, real fast, that money management and risk management are 2 aspects of the same thing. Money management is basically dealing with how much and when and why do I buy or sell this instrument. How much? 100,000 euros, 1 contract of the DAX, 1 FTSE, whatever. You understand? That's the size. That's money management. And when? And then you should answer why. Why now 1 contract? Why tomorrow half? Why the day after tomorrow 2 contracts? Why more? Why less? The quantity. You understand? How much you buy, when and why. If you answer only the when, that's bad. You need to answer the why. I said an argument before. High volatility could be less contracts, low volatility could be more contracts. That could be an argument, right? Okay, so money management is like a car, it's akin to a car. A car is very interesting because it's a device that has at least 3 brake systems. I'm not talking about automated cars, but real cars, right? With gears. What are the 3 brake systems in a car? Pedal brake, the handbrake, the engine brake. And I wonder, how come they have only 1 accelerator pedal? Unless you buy, I used to be a specialty car broker in the States, in Florida. I lived there for a couple of years in a company, and we bought a Mustang Mach-1, which is a car to run the quarter mile, which is an accelerating. And you had different accelerators with a revolution rev limiter, and after so many revolutions, you had different ways to accelerate. And you have this in Formula 1 cars. But in normal cars, you have only 1 accelerator. You understand? You can have more accelerators. But I wouldn't recommend this to you because that's sure death, the way you trade already. So you have 1 accelerator and 3 brakes. Money management deals with acceleration, with the accelerator pedal. And risk management deals with the 3 brakes. You understand? I'm going to talk a little bit later about money management. I'm going to only say 1 sentence or 2 sentences, which are crucial for me, afterwards. I'm going to go now to the brakes. Some people have it all together. Some people say money management and risk management is the same thing. I don't agree. For me, risk management is separate. I understand it's the same car, the same account, but for me it's so important. There was a lady just now, she told me, I need to trust you because you're Capricorn, and what was that ship? The year of the ship, she made already the whole thing. So I don't know if it helps. But I'm a very earthy guy. You know, and one of the things I learned in business was to take care of my risks. That's something life taught me. Okay? And this is one of the things I want to convey to you guys. If you don't know your risks, don't trade. You need to learn to deal with the 3 brake systems very well. And that's what I'm going to explain now, my risk management method. And that's the core of our philosophy, which is called the FX method. It's a method. It's a way of trading, a way of thinking. A method is above a system, you understand? A method makes systems. A method stops systems. A method combines systems. A system is only one. A method is a factory. You understand? And that's what we deliver in our advanced education, which is explained here. Okay? It's a 5-day course. It's in our training lab. It's not here in London. Okay? And it's a full immersion into automated trading from 0 to 120. Okay? And I'm going to introduce you now, and I'm very proud of it because I've read a lot of books on risk management, to the core of the FX method. And the core of the FX method is the risk management. You understand? Because I don't care how much I earn. The earnings will be given. The earnings are easy. Believe me. What is difficult is to earn in 10 years. What is difficult is not to die around this curve when it becomes rough. Because we get in Forex, we get a Lamborghini or a Ferrari. Some people say, don't mention Ferrari, we like Lamborghinis. Investor here in London told me he only has Lambos. Okay, so the thing is that the main thing is know your risk. If you don't know your risk, don't trade. And we developed in the FX method, or I developed, what I call the safety nets. The safety nets. And I compare it always to the trapeze artist. The trapeze artist goes from one part to the other part of the circus, jumping. Imagine he's 12 meters high from the floor. What would you call this guy if he doesn't have a single safety net? And there's the floor here, 12 meters high. What's the word used? Well, another definition? Thank you. You were to my lectures, right? Okay, you stole the whole thing. He's suicidal. Because whether it's aware or in an unaware way, which I think it's not, he knows he's gonna die. Sooner or later, he's gonna die. You know what? 95% of you guys trade like this. You're suicidal. And you know why? Because you need to fix something here first. I'm sorry. Because many of us are gamblers that reconvert to traders. You know? And this is actually not the way to do it. And that's why, if the only thing you understood today is the safety nets, I will be very happy. I have people coming in. I've had over 3,500 people in my lectures all over the different countries. And just people coming in after 1 year, sending an email, thank you for this thing. This and another thing I'm going to explain later about money management. These two things can make the change in your trading. The safety net and how we deal with money management. This will come later. There's two things. Okay? So, what happened is, my last biggest hit in trading was on the 7th of May 2010. I mean, I know that many lecturers tell about how they are philanthrope and how they have helicopters, but I don't need this. People that were in my training lab know we have an incredible place with an incredible terrace, and we have a very good lifestyle. They have been to my training lab and they know this. I don't need to show this because it's for me irrelevant. The proof of the pudding is the knowledge, right? I don't care. I'm not a philanthropist, but who cares? You know what I mean? Not that I wouldn't like to. I don't find the time yet for that. Okay? So it's not the point. The point is the knowledge, right? So I'm going to explain you what I did. On the 7th of May 2010, I lost 13,500 euros in 1.5 hours. It was exactly the day where I started moving my stop losses for the last time ever. It was exactly the day that Spain's president was brought to Brussels and told, listen, you either move, because it was the first big Greek crisis. And I entered a trade. I was earning 1,500 euros in a matter of 3 minutes. And I just became very greedy. And I started to do manual trading. And I had bots working. I had doubled my account from 10 grand to 19,500 grand. And I lost more than 2/3 in just 1.5 hours. And I said, that's the last time. I could tell you about my wins. I will show you them later, audited. It's very easy, blah, blah, blah. I will show you audited accounts from me and from my students. That's another thing also that distinguishes us. We show real results, not a PDF, not a video. Everybody can do a video or a PDF and show how they double the account. I'm going to show you audited accounts. You see the difference. Now I'm going to tell you my failures, because I learn much more from my failures than from my earnings. You understand? And if you have it in place, and you know your 3 break systems, you'll do very well long term. And I don't care if you make my paid education or not. The main thing is you get some value. And the value is in risk management. Okay, so I said, that's it. That was the day where I said, that's it. Not that they didn't have drawdowns later, but I didn't have any more crazy drawdowns later. That's already 6 years, which is not bad at all. Okay, and I said, you know what? I saw myself, and I understood I was again the trapeze artist. One more time in my life. Something is wrong. You know the theory. You need to do it hammerfest, they say in German. You need to do it really so solid that not even with a hammer you can crumble it. And that's how he developed the safety nets method. And he said, you know what? If a trapeze artist goes and falls down a first net and breaks it, could happen, right? I would like to have a second net. And if he breaks the second net, I would like to have a third net. And if he breaks the third one, I would like to have a fourth one. And if he first breaks the fourth one, he dies. Bad luck. But it's very improbable to break 4 nets in a row. And I'm going to explain you what these 4 nets are. They have names. I'm going to explain you mathematically. One is in a video, and all guys are going to send you today this video. This is the third net, third safety net. It's called the risk. They all have the name risk before them. So this is net number 1, net 2, and this is unique. You could have heard about what we talked before, in other words, from another lecturer. What you're going to hear now is unique. You're not going to hear it unless they stole it from me, which already is happening. But I created this. Okay, safety net number 3 is the risk. You fill out the forms, so we have your data and we can send you everything and write properly. Okay, so that's a 15% drawdown. What's a drawdown? A drawdown is the dip from the highest point in the curve to the lowest point in the curve. I detail it much more because there's 3 definitions to this, because I need to discuss which curve. Is it the balance curve, the equity curve? I don't want to make it too complicated now. And that's the biggest thing. That's what I call the global risk of the trading style. That's the biggest figure that you need to understand. And I always check, and I always take an example for this. I like very much. And you understood one thing about me, that I like cartoons, right? Yes?
Yes.
You understood? Great. That's something you need to remember about me. So we have another great cartoon from my time, which is the coyote. And it's a very, very quick search. There we go. Coyote, this is the one. 1 second. Let's get it properly. Okay, did you observe something there? I'm not joking.
We got pushed.
Yes, you got pushed. Okay, that's how you trade actually. But did you? What's that? Okay, what did you observe? I noticed one thing which is very interesting.
No safety net.
Sorry?
No safety
No safety net, very good, myself. No safety net, very good, very good. What else?
It was pushed.
He was pushed, yeah. We push ourselves. We are the road runner, huh? We don't need anybody to do this. We do it ourselves on ourselves, okay? But there was something very interesting for me as a guy who studied physics.
It took him a while to start going down.
This is also interesting, very good.
Falls in slow motion, really.
Falls in slow motion, but there was something very interesting for me, which was, first we heard a sound. Then we stop hearing the sound. I'm going to put it again. And after 2 seconds, we see a cloud. The moment when we don't hear him anymore has a name. It has a name. There is a book on this. by an excellent American guy, which I love his books. And this moment, it's called the tipping point. Which means, I'm going to show you now. It's very crucial. We hear the coyote, we stop hearing, and after we stop hearing, we know he will die. He doesn't die because it's a cartoon, that's a beautiful part. But if it's on your account, you may not die, but your money will die. So you die a bit, right? And if you lose a lot of accounts, you die fully. Or you may die, or you may end up below a bridge. You understand? So take it seriously. So what is this? This is the tipping point. And that's a very important moment in trading. And I'm going to give you my calculations on this. I'm going to tell you what is the tipping point. The tipping point, there's a book which is called this way, and the author, it's Malcolm Gladwell. It doesn't have anything to do with trading, but he understood. It's an excellent, he has another book which you should read. You shouldn't read this one, it's too technical. You should read Malcolm Gladwell. Yes, sure. Malcolm, M-A-L-C-O-L-M, Gladwell. G-L-A, sorry for my handwriting, G-L-A-D-W-E-L-L, Gladwell. It's in Amazon. He has another book which is called Outliers. This book you should study if you want to trade. Outliers. Outliers. And he studies what made... Yes, Outliers. You should read it if you want to trade. It's my recommendation. You say, what does it have to do with trading? Yes. Well, because only outliers, excellent traders, make it. And he studied what makes you an outlier. First thing, 10,000 hours. First, he studied Steve Jobs. He studied Einstein. He studied, you name it, the geniuses. And he found the patterns. Some are very amazing, like culture. Why Chinese are the way they are? It has to do with the rice culture. He explains it. Why are they so fightful in South states, in Texas? Everybody has guns and everybody wants to kill everybody. Everybody from there. Here, it has to do with the culture. So culture is a very big factor. He studied the Jewish immigration in New York. It's a very interesting book. Culture has to do a lot with success. Can play in favor or against you. You should read it. But the first thing is 10,000 hours. If you want to become a master, you need to put your hours into it. Otherwise, you can do pottery or taekwondo. There's other activities that don't trade. Okay, so the tipping point means that's the point of no return. When the coyote falls down, right, there is a moment after you don't hear him anymore. You have to search again. Coyote falls down the cliff. Okay. Very good education, actually. Just observe the moment. Well, he gets pushed, whatever, he got pushed. Yes. Slow motion, very good point. Very important. Takes a while. Stops. That's the tipping point. You know what? It's at 23% of your account. You say, what? He's crazy. 23 is very far from the bottom. No! When you cross at 23%, I'm going to explain it now, you already died. That's another fall of the cliff. We have a lot of them, actually. We don't need to watch them all. With one is enough. We learn the lesson, right? So the point is that once you go beyond this 23%, I will explain you, you're already following the law of gravity. And after you follow the law of gravity, you fall down like a plummet. Like a plummet. Sorry? Yes, of course. But you follow it in trading also. If you are losing 23%, you are really following the laws of gravity.
It's last net, yeah.
Yes. I mean, the last net is the floor. That's the last net. Exactly. But what I'm telling you is that the tipping point is 23%. It's not 50%. It's not 30%. It's not 45%. And I'm going to explain you now why. You say, but 23% is too close. Well, that's the truth. And I'm going to explain you why this is the tipping point. Once you lose a 5% in your account, if you take something from this lecture, take this paper and glue it on your screens. On your screen, if you have 1, and if you have 5 or 4, like we do, just in the middle of all 4. Okay, because that's the most important lesson you can get out of this lecture. Okay, and when you lose a 5%, let's say you have 100 pounds. You have how many pounds still in the account? 95. If you need to recover from 95 back to 100, you need to divide 5 divided by 95. You follow? Because you only have 95. That's the formula here, which is not written here. So you have a 5.26%. So going down costs 5, going up costs 5.26. It doesn't cost the same. In other words, the English state has 100% debt. Did you know this? We talked about the Spanish debt, we talked about the Italian debt, we talk about the French debt, but we don't talk about the English debt. You know what? You are beyond the tipping point as well. It's an 80%. When you go beyond 80% of debt, that it was said by the IMF, not by me. And then the study was kind of made to disappear. You understand? When you got too much into debt, you go beyond the tipping point, there's no way you're going to repay this. You understand? Not even in one generation. You follow? Tipping points are everywhere. Exponential functions are everywhere. In China, the soil, 18% of the soil is totally spoiled. I went out of Shanghai and go every year, 2-3 times a year to China, or to Hong Kong, which is kind of a mix between China and the UK, whatever, it's very, very particular. And I went into this incredible magnetic train, and it's all spoiled, all dirty below there. 18% of the floor is spoiled means it's unrecoverable. It's totally contaminated. That's a tipping point. I can tell you more tipping points, but I don't want you to think I'm a catastrophist. I'm not. I just watch statistics and patterns. Okay? So, when you lose 5%, you need a 5.26%. So the difference is a 0.26%. If we have an average trading system, average, not great, not bad, I'm going to show you results of the last course, the last English course in our lab in Madrid. This is things the students did. Okay, this is not things I did. This is not my accounts. This is just what they did in their education. And I didn't even organize it. Olga just copied it here, and I hope I find something good. Otherwise, there is no way to show off. Okay. So I'm going to take just some back test on the bot you're going to get on the pound Swissy, for example. And I'm going to open it. I hope it opens here. So this is not my computer. Yes, it opens. This is what they did. Oops. Yes, it's not especially great, not bad either. And they did an optimization on the bot since 2007. You see, let me do one thing here. Yes, let me take the laser, it helps. You see here, it started, it's a lot of years, right? That's the minimum we do it. We'll talk about this a lot in the evening, right? So they took the bot we give out for free, and they made from 2007 to 2016 on a $10,000 account. They more than doubled it. They made $14,600 profit over this many years. Okay, and what I wanted to show you here is this. Every time it goes into the market, the system will make $13 on average. Let me explain you what it is. That's called the mathematical expectancy or the expected payoff. That's a number you need to know. Because you need to know how many trades would it take me when I'm the coyote, I'm falling down. How much more force will it take me to go back to the cliff? He does in some cartoons. Did you watch it? He falls and he manages, right? And then Roadrunner comes and and picks on him or something, right? So sometimes you manage to go back to the cliff. On average, the system is making $13. You see that? And the account we always put on $10,000 because $10,000 is very easy to calculate. Because 10,000 is 100 times 100. You follow? 100 times 100 is 10,000. Yes? Please help me with this. Simple math. If I want percentage, I need to divide by 100. Dividing by 100 is the same as moving the comma 2 times to the left or to the right? To the left or to the right? To the left. I need to move the comma twice to the left. That means they made 146.76% earnings. You follow? And they earn, every time they go into the market, they earn 0.13%. 0.13%. You understand? Because it's twice the comma to the left. Because I have $10,000 account. I divide by 100, right? If I want percentage. And that's a 0.13%. Is that good or bad? Let me put it in reference. I don't know what the banks pay in the UK. In Spain, they pay close to 0. Right? But they pay something. Maybe there is ING, this Dutch bank, it pays in Spain like a 1% per year. Yes? Right? Okay, that's 9 trades. In 9 trades, I'm making 1%. So, I'm sorry, but I prefer trading to banking. One of the reasons you are here is because we have financial repression. Did you know this? Did you know we have financial repression? Do you know what it is? Well, it has a lot of signs. In Cyprus, it had another color, right? You know what happened with the haircut? Everybody who had more than 100,000 in their account had to pay 41% just because. It was not only the Russian oligarchs who paid that. A lot of entrepreneurs had to pay this money. That's part of the financial repression. We're living in a very strange epoch because in order to avoid the total collapse and a depression, like 1929, they said, okay, let's print a lot of money. But this game, and I'm gonna recommend your book, but promise it's only in German. Yeah. Yes, it's not very good. But I'm gonna recommend you another book which is in English. It's James Rickards, The Death of Money, and the other one is Currency Wars. I'll get to this later when I speak about macroeconomics. The thing is that you need to move your money because in Denmark, if you leave your money in the bank, you have already such a big interest rate. In Switzerland, the same, that they cash on you to pay money to keep your money. Do you know this? Yeah. What will be the next move? Cash will be forbidden. Cash will be forbidden step by step, gradually. Because we live, yes, I know. Because we live in financial repression. That's why you have to trade. So, if you make 9 trades of this trading system, you already make 1%. You already are better than the best bank in England on a fixed deposit, right? So I want you to understand that 0.13%, because I'm trading on safety nets, I'm going to explain you in a minute, it's quite good money. Because some people say, oh, it's 0.1%. This other lecturer told me I can earn a 3% every time. I say, great. With what risk? Again with the fairy tales. If you're earning a 3% every time, something is very wrong in your risk. Let me tell you this as well. Okay? Something is very wrong there. There's no way you can make 3% every time, on average. Okay, so the whole argument here is this. I need to calculate how much more energy does the coyote need, because the further he goes down, what happens with the law of gravity? He's faster. It's called acceleration. It's exponential. So the more he flies down, the harder the hit. Yes or no?
Yes.
And that's what happens in trading. It's law of gravity. If you fall 5% and you make on average, that's the last column, a 0.1%, you only need 3 trades more to recover from this pit. That's not a big difference. It's doable, right? You lose a 5%, you need a 5.26%. I divide 0.26 divided by 0.1, that's 3 trades. There's a video on this. But anyway, you need to calculate in trades how much more does it cost me to recover. The point is that if you lose a 50%, you need 500 more trades to recover. That's totally undoable. unless you're Superman. How come the system that brought you down into the dip would recover you from the dip? Not with the same system. There is no way you lose 50% of your capital and you're gonna ever recover. You are sure death. Because you're gonna start lotting more. You understand? Because you will have this feeling of revenge. You follow? And mathematically, there's no way you're gonna make it. The system was making 0.1%. That's an average system. It's a good system, right? So your expectancy will tell you how costly is this drawdown. And I tell you, there's a gray line here. It says after 23%, you need 65 more trades to recover. That's tough, because this is 65 more positive trades. That will take some time. Still doable, but 30% will cost you double amount of trades, because you're really following the law of gravity. Every percentage you go down, sure death. You understand? It's not the same to lose 5% to 6% than to lose 20% to 21%. Do you follow? So when you watch your MetaTrader your account, be careful about this. If you lost 23%, what do you need to do? It's called the game over. Yes, it's called, I send the fax to the broker, I withdraw the rest of my capital, and I tell myself, I failed in this investment, but I didn't die. And that's a very big difference. And one of the good things about Forex, and I'm going to explain it now, is that your capital is your liquidity. It doesn't happen in any other business. If you open a store, your capital is in the walls. Your capital is in the floors. Your capital doesn't belong to you anymore. You lost it. If you close the business, you're done. The good thing about finances, of Forex trading in this case, you can move the store. You understand? The rest of it. That's very important to trade, actually. That's why many of you are here. You have the dream to have this flexibility to move this capital. You understand? Your savings, or whatever it is. So game over means you need to close your account forever. This account is a failure. And if you follow this, you'll be happy and you'll probably write us, close account forever. Does it mean you don't trade ever again? No. It reminds me of my 7th of May 2010. If I had lost 3,000 euros, only 3,000 euros, you know, I would still be in earnings in this account. Because I already had made 9,500 euros on it. Told you, January started with 10 grand, had 19,500, right? And I lost there 30,500. If I only lost 30% of the initial capital, which was 3,000 euros, I still would be in earnings. I would close the account. I follow this rule by the book now. By the book. We hardly arrived at 33% ever. But you need to understand, losing a 5% is doable. It's nothing. Losing a 10% is still okay. I see like this is yellow light, 5%. Red is green, orange light. 15% is red light. And 20% is black light or dark light. It's very close to 23%. We have this traffic lamp. You understand? It's very simple. You put 10 grand. Once you lose 1,000, okay, still trading. But you're already in the orange lamp. Soon it's going to be red. When you lose 1,500, you're already in the red light. You need to change things. You understand? And when you lose 2,000 on the 10 grand account, you're already in black light. You're close to close the account. You're almost ready to call the broker and say, that's it, give me my money back. And you withdraw it. You understand? It's a game over. I compare it to what they call in physics. In nuclear physics, there is a term, it's called the super-GAU. And there were 3 in the history. One is Fukushima, the other one is Chernobyl. Sounds familiar. I wonder, do you think it's logical to reopen the nuclear plant in the same place? Well, that's what people do. They lose 30% and they continue trading. It's the same as opening Fukushima in the same place. It's the same, it's equal. It makes no sense. It's a failure. It's a proven failure, right? You're insane if you reopen turnover. Are you? It's a melt, it's a fusion melt of your trading. It's a meltdown. You're a failure. You need to close your account.
So what do? You give up?
No, I closed that account. I realized that I failed. That's the first thing. With these words, okay? And I continue in demo and I need to create a new system. And once this is proved in demo, I start trading again. But not with the old one. Because if the old one lost me 23%, it's not good enough. But I go to the sandbox of the demo at least several months. I force myself to go to the sandbox of the demo. In this account, I have many accounts. I'll show you later.
Demo?
Demo, real. Demo, I have a lot also. That was below the belt line. Okay? I won't be talking to you. You understand? So it's very important you close your account. And now you know the big figure. And the thing is that, look at these lines here. It goes down. And after 23%, the tipping point, they really start separating from each other. You see? The loss is linear. The loss is linear. The recovery is exponential. Right? Once you have lost 90%, you need a 900% to recover. It's crazy! But you continue trading. You understand? So the tipping point is 23%. Oh, this guy's too conservative. Go back to your other guys. Lose your money, guys. Go back to your old trading style. 23%. If you have this clear, now you will understand the other safety nets. Okay? So everybody understood why it's 23%. Because after the coyote, after this, we don't hear the coyote anymore. Doesn't mean in the picture he's close to the floor. No, he's very far from the floor. But he's at high speed. That's why I don't hear him anymore. Because he went beyond the speed of sound. I'm serious. He passed Mach 1. He's supersonical. You understand? He's beyond the point. We don't hear him anymore because he's beyond the speed of sound. He's close to death. That's 23%. Sorry to repeat it so often. Once we understood this, we go to the safety net number 1, and that's the risk per position. How much should I risk per position? Okay, how much? How much percentage? 5! 5! Sorry. That's great. Let's stay about 5. Sorry, it's not personal. Raisa. Look at this. We have now a figure which finally we cleared. We were in the midst of trading. We didn't know. And now suddenly arised the 23%. It was sent by an angel that explained us 23% is the figure. And now I understood 23%, and somebody said 5. If we risk 5%, how many trades we need to close the nuclear plant? 4. Can it happen that I have 4 losing trades? It happens every week. I will be closing my nuclear plant with 5% every week. It's very good for, not for us, understand? So 5% is not the answer. I said maximally. So this question it's very tricky because I didn't say a word which is crucial to it, which is on the risk per position first. I didn't clear it's per position or per trade, but because I said before we only trade asterisk systems, for me this is the same as risk per trade. Because for me, 1 position equals 1 trade. For me, the guys who came late, they will not follow this, but we have the recording of these first 2 hours, so you can follow it up later on YouTube. You understand? So the thing is that what is the maximal risk is not the same as the average risk. And that answers the questions completely differently. And let me show you something which distinguishes us, the automated traders, from the manual traders. The manual traders, they trade fork systems. Sorry for this sign. Okay? Fork systems, which is stupid systems. They go into the market entry. Do you see a fork? Do you see a fork here? That's the exit, take profit, and that's the stop loss. That's a fork system. It's a super silly system. You either go out by stop loss or take profit, an entry point, right? You only have two possible exits, right? That's stupid. Because if I see the market goes against me, why wouldn't I close the trade here? Or if I already make enough earnings, why don't I close the trade a little bit earlier? The good thing with bots, which have intelligent rules, is that I can have a maximal risk and I can risk on average here. If half of the trades I go out in break even, half of the trades, you understand? And the other half I go to the stop loss, my average risk will be very different to my maximal risk. And that's the interesting part. We don't trade fork systems. And now we'll answer the question about the percentage, because it will be very different, the maximal risk and the average risk. You follow? How do we see this? We see it here. You see the back test, it tells me largest, you see here, largest losing trade, how much is it in percentage? Yeah, I moved the comma twice. 1.16. What is the average loss? Average losing trade is below. You need to read this MetaTrader things. 1.01%. They're different. You see that? If the average loss is different to the maximal loss, what do we have? We don't have a fork system. We have a smart system. You understand? If the average loss is the same as the maximal loss, we have a fork system. You understand? How are you doing? Everybody understood this?
Yep.
It's an important concept because it changes everything risk-wise. You understood it or not? It's not so easy. If we close many trades here, let me show you this another way. Oh, I don't have my software here. But I could show you how it looks. All the stop losses, the points. We would have, in the fork system, we would have all the points here. This is the losses, and this is the earnings. It will look like this. And maybe if it's a smart system, it has many exits in other points. You know, that would be a smart system. That exits a little bit early, a little bit later, not exactly 200 points, not exactly 100 points. A bit earlier, a bit later. It's like a company. I mean, I can cut the costs earlier in time, maybe, you know? Can cut the budget. It's the same. A bit earlier, or I can prolong the budget. So, if we take a maximum risk of 2%, how many trades we would need to have to close the thing? How many trades? 11. 2 times 11 is 22. That's why we always play trading like a soccer team. We can't put 11 players in an account. And that's what I'm going to show you. I'm not a big football fan, but once I saw it, I understood it. I have my goalkeeper, I have my midfielders, I have my defenders, I have my strikers. And that's how I trade. I never trade more than 11 if I put 2% maximal risk. One time, one trade, but I put 11 players in the field together.
So can I understand this right?
Yes.
What you're saying, that the full system that you have,
Yes.
this is the manual trading. Obviously, we put a stop loss.
No, it's automated.
And then the one that you're saying that you go many times in and out, that's an EA system.
Yes.
So you're not physically doing it.
It's here.
No.
This is one of them. This is the ball I give out for free. This is on one. This is one player, which is playing now the pound against the Swiss.
Yeah.
And I have another player I'm going to show you in a minute, which is playing the euro against the New Zealand dollar. And I have another player, which is playing the dollar against the yen. And once I have 11 players, that's the maximal risk I can have per trade, 2%, because I never go beyond the 23%. What it means is that if all 11 players go to play Champions League, I don't know, they go to whatever country, and they eat something very bad, and all have diarrhea, terrible diarrhea, they don't play this 11. That's the worst that can happen, no? They can be all 11 injured. It's very rare, right? That all 11 systems will go against 2% at the same time. It's very rare. It's very rare that Messi is moody and the other guy is very moody as well on the same day, right? But that's my maximal risk per trade. And on average, I never go beyond 1%, which makes it even more safe. Because I would need 23 hits, which is almost impossible. So I distinguish this very clearly. I say safety net number 1. I never trade beyond 2%, never. You see it here. I trade only 1.16. You saw this, right? What happened here? Yes. My maximal risk is 1.16. I'm going to show you to read these things. That's an EA. You can apply to your manual trading. Same philosophy. You say, I don't like this guy, I don't like this EA thing, but I take the same method of the safety nets and apply to my manual trading. Are you doing stocks? Same thing. Are you doing futures? Same thing. 23% is the magical number. Right? So, 2% maximally, 1% on average. You follow? If you do that, because the safety nets are dynamic, you understand? If you put the third net, let's say for instance you are really doing, you won the lottery, and you have £1 million. First, you earn £2 million. First million you buy a flat and stuff. The other million you say I'm going to trade now. Okay? Would you risk a 23% on 1 million? Never. Why? Why? No, if you have 1 million, first if you have 1 million, your life is different. But if you have 1 million and you lose £230,000, it's not acceptable. So what I'm telling you is that for a smaller account, 10 grand, 5 grand, 2 grand, 23% is acceptable because losing £2,300 on 10 grand, it's not your death, right? Is it? You spend this in other things, right? Yes. But if you go higher in capital, you put the safety nets higher. If you never put them below. Some people say, okay, I'm going to open a £500 account because I don't have enough capital. I want to access this offer. Some people just write us. Say, I want to go to your course. I only have 500. Well, whatever. If you prove to me you are unemployed and stuff, maybe we do this. Okay? I shouldn't say it, but whatever. Okay? So, yeah, shouldn't say it. But let's say, and they say, okay, because it's only £500, I can risk 400. No! Wrong! The worst is always 23%. You understand? On £500, you will lose 23%. On £5,000, 23%. On £20,000, 23%. On 1 million, 10%. Because I had a friend in the border of Mongolia, Russian, Vasily. He has an incredible EA. He was trading several millions from a guy. Till I understood this guy was not so friendly. I always say you need to trade like you're trading for the Russian mafia. If you would lose, yes, if you would lose 230,000 to the Russian mafia, like Vasily almost did, that's a real story, eh? Yeah. You know what I mean? Okay. We were chatting to each other. I almost met him in Cyprus last year. We're friends, but I never met him in person. We are cyber friends. I learned a lot from him about trading. Seriously, about automated trading. They have very good coders in Russia, and Ukraine, Eastern Europe. To make the story short, you wouldn't want to lose them $250,000, would you? No. You didn't understand the joke. The higher the capital, the less the risk. So if you put here 10%, you don't put here 2% and 1%. You understand? You need to divide. If you put here 10%, your average will not be 1%, your average will be 0.5, like this gentleman said, right? And your maximal would be 1%. You need to divide everything and get safety nets up. You can put the safety nets up closer to the trapeze artist. You can never put them down. You understand? Because you could lose them 100 grand. That's the end of the friendship, but it's not the end of the life. So slight difference, right? You understood it, right? This is a tipping point.
But still, if you have a million, you still have like 770 to play left.
Well, believe me, the guy who has a million doesn't think like this. That's why he has a million. Okay? I know one of such guys. I know one of them. I meet him on Monday. And he doesn't think this way.
They don't like it.
It's one of the hardest clients. That's why he has this amount of money. It correlates. But to make the story short, 2%, 1%. You follow? Second safety net, and with this I'm going to close on this course. Second safety net is the risk per streak. What is a streak? A streak is when you're really unlucky. When you have consecutive events, you have your, you don't have the queen anymore, do you? I don't have pounds here. Can you believe this? I left them in the room. So just flip a coin, right? What a streak is if you have, or you go to the casino, you have red, 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 red. When the color changes, it's the end of the streak. You understand? So what is a streak in trading? A streak can be either positive trades or negative trades. And people ask, smart people, teacher, what is zero? I don't care what is zero, if positive or negative, depends on your personality. But put it always on the same calculation. If for you zero is a positive trade, put it on positive trades. If for you it's a negative trade, calculate it always as a negative trade. It's very hard exactly to close at zero. You must be a master exactly to close the trade at zero. You understand? Because there is a spread. But to make the story short, just keep them one side or the other. I don't care how many trades you have. I care about the money you lose. And I say that this here, it has to be 2/3 of this. If you're risking 23%, when you have lost 15% in one streak, something is very wrong. If you keep losing 1 to till 15% in one go, you understand? It can be months, it can be weeks, it can be one day, it can be hours. But if it's a 15% in one streak, will you wait till 23%? Is it not an alert to stop earlier?
Yeah.
It is. So this is an additional safety net, and the hedge funds have another thing. They say if something like Shanghai Stock Exchange loses in one day more than 10%, it has happened recently a lot. It's going to happen a lot in 2017 in my crystal ball. Okay, so if something loses a lot in a day, 10%, don't trade. Whether it's your account or the index. Because that's very risky. 10% in one day, that's what the hedge funds do. Many hedge funds say if you lose a 10% daily, don't trade.
Like Barclays stopped it there. 10% they lost it when they lost the market.
One guy lost. One single guy. Yeah. Yeah.
That's what it takes.
That's a manual trade again. If it's a bot, it wouldn't have happened this way.
Swiss franc has this issue, right?
Yes, Swiss franc. Very good, Faisal. When something loses a 10% daily, it's not the day for trading. If your account loses a 10% in a day, something is very wrong. Do you want to hit the 23%? No way. You stop. What's the difference here? Here is game over. You stop forever. Here you stop for 2 to 5 weeks. But let me tell you an anecdote. August 2011. I already had this in place, right? I started with this in 2010, I told you. 7th of May 2010, I lost 13 grand in one day, in 1 hour and a half, 1 hour and 47 minutes exactly. And I said, that's it. And I developed this. I said, how can it be? I studied mathematics. What the hell I'm doing with my trading and with my life? You understand? And I said, there is no way, the way I'm handling risk is wrong. So I developed this till the end. You follow? And I applied to everything, even to real estate. You say, oh, but real estate went down to 30%. Well, it's the moment to sell. oh yeah, but it's very difficult because the taxes and stuff. Well, chances are it will fall, really. Or share value. How many times it falls? Oh yeah, but do you know the shares now in the stock index are not the ones that were? How many shares we have from 30 years ago? Almost none, you know? Because majority of the companies, they disappeared. So be careful about this. When something loses at 23 or 30% value, something is very wrong. You need to close everything. And in 2011, in August, I happened to follow the rule because the stock market in Germany and everything crumbled down, if you remember. And I stopped the account thing, but I didn't stop it 5 weeks. I stopped it 2 because I was too impatient. And I continued trading. And normally in 2 to 5 weeks, the markets change. No matter if it was Lehman Brothers in 2008, no matter it was whatever crisis, after 5 weeks we see a little bit of sun. Believe me, it's statistics. So you stop for 5 weeks. Don't be so neurotical about trading. You know, life will continue after. Stop the trading account. It doesn't mean you withdraw your money, and you continue trading after 5 weeks. You follow?